Good morning. This is the Elliott Wave weekly update for the Dow Jones, being recorded on Sunday, June the 29th at 11:10 a.m. Pacific Daylight Time. I'm starting here on the cash market, and I am also on my maximum monthly chart. And I just want to recap where we are as we, in my opinion, approach the finishing stages of a cycle third wave. Now, starting from that large point, within cycle wave three, there will be five waves of primary degree. And we can see one, two, three, and four complete. We remain within primary wave five. Within primary wave five, we have five waves of intermediate degree, of which we have one, two, three, and four complete, with intermediate four completing in October of 2022. So from that point, and I'm going to come quickly down to my 5-year weekly chart, and there is that intermediate wave 4, October of 2022. We are within intermediate wave 5 of primary wave 5 of that cycle third wave. Within intermediate wave 5, there'll be five waves of minor degree, of which we have one, two, three, and four complete. We remain within minor wave 5. Minor wave 4 completed on April the 7th of this year. So within minor wave 5, we will have five waves of minute degree, of which I believe one, two, three, and four are complete. Bringing it down to the daily chart, we can see minor wave 4, one, two, three, and four. On the minute degree, we are within minute wave 5 of minor wave 5, of intermediate wave 5, of primary wave 5, of cycle wave 3. Now, I will go over where within this whole finishing stage and, towards the tail end of it, how much we got left. But I want to also include anyone that studies Elliott or is learning Elliott should understand that a fourth wave, when in progress, will find its terminus, its endpoint, within the price territory of the fourth wave of one lesser degree, or counting the finishing stages of a cycle fourth wave. So the fourth wave of one lesser degree is going to be the primary. And there it is. I've put a big green box around it so that we can see that, yes, the potential for a larger decline in the form of cycle wave 4, which again, if we're looking at cycle wave 3 began in 1949. So basically in July of 1949. So we have, in essence, a very long period of time that the market has been putting in a rally, and it has included several, a long period of deflation and very slow market. This, the great financial collapse of 2009, and also the 1987 crash. And I'm chuckling because I remember I was trading at the time. This, we thought the world was coming to an end. And there it is, you can barely see it. And then we have the pandemic here. Again, a period of time where the markets were dropping severely, just falling away. And again, we stopped, recovered, and now moving to new all-time highs. So to think that this fourth wave would, produce like what many would consider the end of the world, that may be the case. But in this case, I feel that there is still several upside moves left. This would only be a cycle fourth wave. What comes after that is a cycle fifth wave, which is another period of economic expansion or recovery, or however we want to term it. And that then would complete the super cycle, wave 3. So we get cycle wave 5 up. And within cycle wave 5 up, there will be 5 waves of primary degree. So again, if we just follow the Elliott and follow what things are, getting through this will lead to another expansion, another very, very strong longer-term upside move. But right now, we're getting close to finishing this one, which has been in effect for over 75 years. So, with that in mind, and again, and let me just say that I take it in pieces. So, in other words, what I'm looking at here, let's go back out to this 5-year weekly chart. What am I looking for? Well, we have a bunch of fourth waves coming off. So this whole thing let me just say, is it possible that it could just turn and drop like a stone? Yes. Everything is possible. It depends on what's going to trigger it. It depends on what the catalyst is going to be that's going to drive the market off of its highs. Right now, I'm saying, well, things are getting a little bit overbought on a little bit longer term basis. And so therefore, the markets might just kind of tip over in their own weight. And then, well, we've also got a couple other things out there that there's plenty to choose from in terms of geopolitical situations. Still very active, regardless of what comments or news stories may be discussing. So we still have a conflict between the United States and Iran, and Israel, Russia and the Ukraine, Russia and the NATO countries. I mean, these are things that are still active. They're unresolved. And could they explode? Could they come real? Yes, of course they can. So not that I am looking at that, but now what I really want to present is the technical picture. Technically, we're reaching a longer term high. So I'd be expecting a longer term correction. So again, people have worked out the fibs and they're talking about that it would take about 26 years high to low to put in that cycle fourth wave if we're just using Fibonacci time cycles. Now, yes, that's also a possibility, but I'm going to go back. Let me go back out to that monthly chart. This was 2000. This was 2009. So the primary degree fourth wave took 9 years. What if the cycle degree fourth wave took 9 years? Maybe, could, but it's going to take time for it to unfold. So how do you begin to look at this? Again, I'm going to go back to my 5-year weekly chart. Well, initially, you're going to look for either an A wave, likely, or even less than an A wave, but some components, the first one is there, support at 36,535. And then we have additional support at 28,725, we'll call it. And we can continue to just walk this out and we can find where we have support. There was 2022, here's 2020, 17,440. So we're going to be dropping, and yes, that's going to be a big drop, but we have areas where we stop and we bounce. So again, it's a correction, and I don't view it as likely being the end of the world. Now, let me bring it down to the daily because now we just need to update. Where are we within minor wave 5 to put these finishing moves on? So within minor 5, I'm looking for 5 waves of minute degree. We have 1, 2, 3, and 4 are complete. We're in minute wave 5. The initial level that I believe could complete everything is the 100% mark, where minute wave 5 would be equal to minute wave 1. And that is at 45,551. Is that new all-time high? It sure is. Remember that we're really coming off of the cash market, which was 45,075, I'm going to call it. That being the all-time high right now, where we stand. So anything above that, new all-time highs. And the way this is constructed, yes, it appears that that would be a good level. Now, let's come down inside this minute fifth wave. I'm going to come down to my hourly. There is minuet wave 1 of minute wave 5, minuet wave 2 of minute wave 5. We still remain within minuet wave 3. So what is the target there? Well, we've already surpassed the 100%, where wave 3 would be equal to wave 1, and we've actually got a little bit more, which is exactly what I look for. And again, to explain why, because when we're looking for a five-wave sequence, which we are, that waves 1, 3, and 5, wave 3, out of those, wave 3 is normally the longest and the strongest. But what it cannot be is the shortest. Wave 1 was pretty big, pretty long. So that would suggest that wave 3 should be at least 100%, and I'm always looking for a little bit more. So there's no threat of wave 3 out of this five-wave sequence would be the shortest wave. Had that occurred, or had it occurred, it puts a lot of pressure on wave 5. If wave 5 extends and wave 3 ends up being the shortest, it invalidates the whole pattern, producing something different than what you would be looking for. So again, wave 3, minuet wave 3, now that we've gotten above 100, our next marker is 1.618. Does not necessarily suggest or even require that the market needs to get to that level, but that's our next level. Now, breaking this third wave down, we have sub-minuets 1, 2, 3, and 4. So here we have for wave 5. Well, there's the 100% marker, 44,097. And then 1.618, 44,431, 32. Those seem pretty good. And then we put a minuet wave 3 up, and then we have a minuet 4, which again, likely going to bring us back down to these levels. And then we run up in that fifth wave. Now, here remains that marker. Minute wave 5. I'm looking for at least 45,552, we'll call it. We have additional resistance above that that's going to be associated with the minor degree. But once we can count up 5 in the minuet degree to finish minute wave 5, then it in turn, minute wave 5 will complete minor wave 5, which will complete intermediate wave 5, which will complete primary wave 5, which will complete cycle wave 3. So this is the most important resistance level or completion level that I'm looking at right now. And it is new all-time highs over what we've already achieved in the Dow. So everything lines up again towards this area, but now we're counting this last 5 waves of minuet degree up, and it may extend beyond that. What would be next? Well, if we get a power rise, so to speak, well, then we have 1.618, which is 48,152. Is the market capable of doing that? Well, of course it is. On a technical basis, yes. What actually is going to force it or put it up there? I don't know. Same deal. I don't know what's going to be the enzyme or the trigger to turn the market lower and put in the high. So to say what's going to support it to constantly just starting to break to new all-time highs, also unknown right now. Okay, so, but what we do know is to follow the technical, follow the count, use our fibs, keep them in alignment, make sure we're not breaking any rules, making sure that wave 3 will be the longest, which right now it is. Out of the 1, 3, and 5 sequence, the 5-wave sequence, and going up to complete minute wave 5. So all of that remains in place, and it all looks pretty good. Now, just bringing it back out to the daily, we want to take a look at our moving averages. And the moving averages really remain in alignment, right? There's the 200, there's the 78, there's the 30, there's the 8. The 8 now climbing more strongly as we have pretty strong rallies. We had 2 days of rallies last week. They're very strong, including Fridays, which was up 432. Now, again, tomorrow, it's the end of the second quarter. So we have a quarterly expiration tomorrow. And right now, it does kind of promise that it's going to be a strong again. Now, what could upset that apple cart? Well, you know, we got a couple of pieces of news that are revolving around the tariffs. And now this disagreement or this whatever that's continuing to happen between Canada and the United States. Could that be enough to kind of stop it? I don't think so. I think we saw that within Friday's trade, we saw the market bounce lower. That was on that Canada news. But then we started back up to complete Friday's expiration. And I think that will continue getting us to complete this minuet wave 3. Then I think we can come down into 4 and go back up into 5. So I don't think that the Canada news is necessarily going to break the back yet. So I think it'd be something else. In any case, technically, this is what I'm looking for Monday. Get up here, come back down into 4, and go back up into 5. All right, let's take a look at the YM, the futures market, and we see it's basically going to be the same thing. Let me come out to that daily. So we can see again, there's minor wave 4, 1, 2, 3, and 4. We're in that 5th wave up, of which there are going to be 5 waves of minuet degree of 1 and 2 are complete. And same deal, we got above the 100%. And let me just show you that because I already took it off. Put it back on so we can see exactly where it is. You can see 44,050 was 100%. We've gotten over it, so therefore wave 3 is not being threatened to be the shortest. And so everything is still looking good. We've got for wave 5, the sub-minuet wave 5, our resistance comes in at 44,513 and 44,916. And then on top of that, we have additional resistance for an extended minuet third wave coming in at 45,266. And that is new highs if we get there. Minute wave 5 projected to be 100%, and that would be to minute wave 1, comes in at 45,672. So I'm kind of thinking that, well, we could get close, come back down, and go back up and not get past it. If we do have additional. Again, you go to the next variable up, and if 100% is exceeded with some force, in other words, it gets up there above it on a solid push, well, the next level would be 48,415. And then we do have some resistance on the minor 5th wave, being 1.618 at 47,461. Either level could complete minute wave 5. So that's really it. And for the Dow, continuing to look for upside, but we got one more high to make to finish my minuet wave 3, come down into 4. Again, you're going to be looking for that 4th wave to kind of come in the area of the previous 4th, and there it is, 43,850. So, yep, looks like we go up and then have a pretty strong down couple of days, and then we run back up again. So let's keep it all in alignment, but nothing really standing in its way yet. Some of the news is a little bit, like, okay, every time we get something in tariffs, the market takes a hit. That's true, but now we saw how the market recovered off of that without too much damage. So that's the picture. I'm going to leave it right there. And the next update will be next week.